Hey guys, welcome to the third part of my options day trading course. If you're new here, I'm Tex and I share my journey with trading and investing in the stock market. So in the previous part, we went over my chart and broker settings, showing you exactly how you can get your setup in the same way that I did mine. In case you missed that, I put a card at the top of the video that's going to take you to a playlist where you can follow each part of the course as it's released. Now in today's video, we're going to talk about the psychological aspect of trading and why it's the most important factor to your success. Also, as a reminder, there's a bunch of helpful links in the description box below, so be sure and check those out. And if you would guys, please hit that like and subscribe button, show your support for the channel, I really do appreciate it. So with that said, let's go ahead and get started with the video. Alright guys, so no matter where you are in your trading journey, you will or already have experienced what I call the 4 phases of development. So in the first phase, you start out doing well and you actually make a little money. This is because you haven't had any negative emotional experiences from the market, which makes you fearless. However, this euphoric time doesn't last long. In the second phase, reality starts to set in as you take loss after loss. You desperately seek the holy grail, hoping to predict the market in order to avoid the pain that you've now associated with it. So in the third phase, you realize there is no holy grail, and your random trading behavior is just not getting you any closer to achieving your goals. So you begin a methodical approach of analyzing your behaviors while meticulously collecting data. Now this can be a frustratingly slow phase, guys. You're just barely breaking even from one day to the next. But in fact, you should be getting excited at this point because you're beginning to discover your edge in the market. Over time, your equity curve begins to rise, but there's a lot of volatility with some big wins and losses as you test the limits of your mental framework. In the final phase, you develop complete confidence in yourself and you no longer fear the erratic behavior of the market. When you reach this phase, your equity curve should be a nice steady rise with minimal drawdowns. Now, the time it takes to achieve consistent profitability is highly variable and impossible to define on an individual basis. For me personally, things really turned around in my third year of trading. Developing your psychological resources for working in an environment that offers unlimited freedom with few boundaries will be your biggest challenge. So what qualities do successful traders have that 90% of people who fail do not? Consistently profitable traders have a winning attitude with a unique edge in the market by learning to think in probabilities. Your edge infers a higher probability of one thing happening over another. Successful traders achieve a state of mind in which they've truly accepted the risk and therefore have the confidence to act as necessary without hesitation. They do not expect a certain outcome because they know the market can't be predicted. Unfulfilled expectations are incredibly damaging to a trader's mindset and a big reason why so many people fail. The market doesn't owe you guys anything, certainly not because you expected it. The thing about trading, guys, is it's a business with no guarantee you'll make money at the end of the day, and in fact exposes you to an environment where the potential to do enormous financial and psychological damage to yourself exists. Your attitude and beliefs will shape the foundation of your success or failure. More than any other career, success in trading requires an introspective consciousness and the discipline to prevent fears from dominating your focus. The fear of being wrong, losing money, missing out, and leaving money on the table are the 4 primary fears of trading, according to Mark Douglas's book Trading in the Zone, which I can highly recommend. This book has really helped my trading from a psychological aspect. There's a link in the description below if you'd like to check it out. Now these fears are at the root of almost every mistake new traders are likely to make. When you're fearful, it becomes very difficult to interpret market-generated information. Your mind becomes frozen on the object of your fear, so you'll hesitate when the market has given you an entry signal, or you'll jump the gun out of fear of missing a trade. You'll rationalize why you should deviate from your plan or why you shouldn't realize a loss after your stop was hit. Simply put, you'll never be able to trust yourself as long as fear is dominating your mindset. When you're plagued with inevitable losses from fear-based decisions, it's easy to think that your lack of technical knowledge is to blame and that the answer is to learn more about the markets. You'll read every trading book you can get your hands on, experiment with every strategy you can find, and overanalyze every tick. Yet the vast amount of conflicting market variables make it impossible to learn enough technical skills to anticipate every way you could lose money. If you've truly accepted the risk, then there should be no emotional pain from the outcome. When you're no longer afraid, it becomes much easier to eliminate these costly errors. So at the end of the day, guys, it comes down to fear. Fear is the biggest driving factor of every mistake you're making. The fear of losing money might be the most common fear that new traders experience. You can experience this when you're thinking about taking a trade or even after you've entered a trade. I can't tell you guys how many times I've stared at a chart like a deer in headlights, only to watch a trade entry come and go. Missing a trade because of this fear can be especially frustrating, which can then lead to chasing a late entry out of FOMO. Hesitating to act on a valid trade signal will be difficult while you're still learning, as you haven't really developed the experience and the confidence to trust the signals yet. But if you never take the trade, then you won't be able to learn and progress in your journey. So the next time you're afraid to execute a trade, try taking the smallest size you can, even just one share or one contract. Your position should be so small that you almost have the feeling of not caring about the money and whether you lose it or not. When you experience that feeling, then you're beginning to accept the risk. If your heart is racing and you're hovering over the mouse watching every tick, then you clearly have too much size and you haven't truly accepted the risk. Now, I know all of you guys who have already been trading have experienced FOMO, which is technically defined as a social anxiety triggered from the belief that others are having fun while you're not. Now, the consequences of FOMO can be devastating to your success. It requires a conscious effort to recognize when you're about to act on fears instead of what the market data is telling you. Now, the problem stems from the way we think. Your analytical decision-making knows that it's not a good idea to chase a trade, but you do it anyway. Now, this is because you're acting on instinct. This form of decision-making is faster than analytical decisions. However, it's driven by emotions, leaving you susceptible to making costly mistakes. It's a completely normal physiological response for you to act on instinct under intense pressure. Our bodies are wired to protect us from pain with a fight or flight response. However, it's very harmful if you allow fear-based decisions into your trading. So always work to be aware of your feelings and thoughts throughout the day. The quicker you can recognize the presence of fear, the more likely you'll be able to talk yourself out of a costly mistake. This isn't easy, but talking to yourself during a trade or talking to yourself when you're thinking about taking a trade can really help. And I mean really talking out loud, not in your head, guys. Talk to yourself out loud. Letting your winners run according to your trade plan is difficult for many new traders, myself included. How many times have you been in a trade only to find yourself taking profits too quickly before either your plan dictates or the market gives you an exit signal? Maybe you looked at your P&L and you saw you're up $200, so you decide to take profit out of fear that you'd lose that money. Or maybe a volatile candle spooked you, triggering a fear that the market was about to reverse on your position. Now, these fears will cause you to search for any evidence that supports your belief that the trade is no longer valid and that you must exit now. You'll overanalyze every candle, indicator, or news article. The first thing I recommend is to hide your P&L. Looking at your P&L invites you to focus on the information that reinforces your fears. Remember, you've already accepted the risk on the trade, right? So you're not going to let a single candle spook you, only to see the next one bounce back and the stock eventually hit your planned target. In order to help you recognize your fears and when they're triggered, I strongly recommend that you keep a journal. It can be a simple handwritten notebook, an Excel spreadsheet, or an online journal. I like to grab a screenshot of the chart I traded and then annotate my entry, risk, and exits, while also noting my emotions at particular points during the trade. Being more conscious about the presence of your fears makes it easier to calmly question, why am I fearful? Has the market given me a signal, or am I acting irrationally based on fear? All of these things are helpful to note in your journal. As you can see from this journal entry, I noted some fear when price initially broke my risk level, But I was able to prevent acting on that fear by reassuring myself the trade was still valid, having not confirmed below my risk level yet. Tracking your trades in this way is incredibly helpful from both a technical and a psychological standpoint. I also recommend you journal trades that you missed. As you're learning to trade, there will be plenty of times that you miss a trade because fear prevented you from executing. So it can be incredibly helpful to look back at the trades you missed and how they would have performed. This can help develop confidence in your system and trading abilities. A powerful journal that really helped my trading system is called Edgewonk. As of this recording, it's a software-based journal that requires a one-time purchase. However, they're releasing a browser-based journal which you can access from any device with an internet connection. Edgewonk provides the ability to track a lot of custom stats unique to your trading system. It does a great job of incorporating both a technical and emotional journal. I especially love the powerful yet easy analytic tools which you can view by selecting a specific list of criteria. The only downside is that option trades can't be imported, so you'll have to manually enter each trade. But I wanted to demonstrate how you can track a lot of unique data as the image on the right shows. I like to track entry and exit criteria, emotions, market conditions, and more, as you can see. Establishing a daily routine is very important. Your routine is something that remains constant and helps you stay grounded in an environment that is full of uncertainty. We're all different, so there's no right or wrong routine to follow, but I've included my routine as an example. Now, I like to start the day with a nice cup of coffee while I read the newspaper. I'll follow that up with a light workout, maybe just 10 or 15 minutes. Just do some core exercises, maybe some push-ups, just to get the blood flowing and improve my cognitive skills. After that, I'll grab a small breakfast and head to the computer to start looking through charts for potential trades. Once my watch list is prepared, I try to review my journal and just refresh on any lessons from the previous day's trades. 10 minutes before the market opens is a time for me to clear my head with some light meditation and positive affirmation practice. It's important to get your head in a good place so that you can focus on trading without mental distractions. I'll admit this is difficult sometimes given my emotions that day, but I try to do this as much as possible. Once the market opens, I'm focused until lunchtime when I always get away from the screens. I strongly recommend you guys do this too. I know when you're very new to trading, you don't want to miss a minute of the action, but it's good to give your eyes and brain a rest. If I come back for the afternoon session, I remind myself that volatility is lower, so I throttle back unless a great opportunity comes up. Once I finish trading for the day, I'll journal my trades and review any lessons learned. In the afternoon, I like to get outside for at least an hour. Just a walk, a run, or a bike ride is a great way to clear your head and come back feeling mentally refreshed. Maybe spend some time with family or take care of some household work. I wrap up the day with some R&R time, maybe Netflix or reading a book before bed. And this part can't be stressed enough, but really try for good sleep. If I'm tired, it definitely impacts my ability to trade well, so prioritize getting 7 to 8 hours of sleep. So psychology is definitely going to be the biggest hurdle for you in trading, and some of us are going to be better at it than others. That's just the way that it is going to work, because some of us are inherently more patient and inherently more disciplined. And I would say that those two traits are going to be the most important traits that you really need to cultivate and focus on in terms of psychology to really ensure your best chance of success. Now, I don't know the exact percentage. There's been a lot of numbers thrown around, but the one that seems to be what I hear the most is about 80% of trading is psychological, or just learning to cope with your emotions, learning to control your emotions, and 20% of it is technical. Now, I know most of you guys are probably excited about the technical aspect of trading. A lot of us are drawn to the idea of trading because it's exciting learning about the technicals and learning how to find setups and take trades and all that good stuff. Obviously, we want to make money. That's the reason we're here, is to make money. But the mindset that you have going into trading, that you have to make money in order to consider a day a good day, if you will, is incredibly damaging. So I know that especially those of you who are new to trading, either you're just getting started, maybe you haven't even started, you're just very, very new. You haven't really traded real money for very long, if at all. Your number one focus right now is the money. And I know mine was too. And that's completely normal. The problem, again, with that is that the emotions that are tied to money will definitely make it difficult for you to achieve that goal. So our goal is to make money, of course, but if you're focused only on whether you made money or you didn't make money, then you're going to fail. You're going to lose money. The simple fact is that you need to get to the point where the process of finding and executing good trades is more exciting than making the money. The money should just be a byproduct of the trading. Now, it's not something that's going to happen overnight. This is something that's going to take a long time. Again, we're all different. I'm in 4 years of trading. Some people might do it in 2 years. Some people who are inherently more patient, more disciplined, more tolerant of risk will be able to turn out larger profits and probably quicker than I have. I'm a pretty risk-averse person. I don't like taking a lot of risk, and trading, especially day trading, involves taking a lot of risk. And so because we're all different in that aspect, we need to understand what our strengths and weaknesses are so that we can prevent ourselves from doing insurmountable damage, both emotionally and physically, quite frankly. There is a physical toll that trading takes on your body. I know that, I'm getting older, of course. I'm by no means over the hill, but a natural process of aging is your hair starts to turn gray. But a byproduct of an incredible amount of stress can also lead to your hair turning gray quicker. And so I'm actually starting to see that. I'm starting to see that some of my hair is turning gray faster than it probably would otherwise, because prior to trading, my job was a very low stress job. I never really had a job that involved the amount of stress that trading involves. So it's been a huge adjustment for me. So if you're coming from a lifestyle and a job that is not stressful, or at least minimal stress, to trading, I think it's going to be probably a bigger adjustment, a bigger struggle for you, at least initially, until you can learn to kind of cope with those emotions, until you can gain the experience necessary to be able to have the confidence to execute your trades without hesitation, and with the conviction that your system and your edge in the market says that you will inherently be profitable more than you will lose. And again, this just takes time. Unfortunately, this is not something that you can rush. I wish there was an easy way where I could just tell you, hey, do this, do that, and you're good to go. And while you can do that with the technical side of trading, you unfortunately cannot do that with the psychological side of trading. And since 80% of trading is psychological, it is going to be incredibly difficult. And it's kind of one of those things that you kind of have to figure out by trial and error. Again, we're all different. So I can't tell you, something that works for me will work for you. It might not. Some of you it will, some of you it won't. So one of the things that I would say is that learning to trade, not just from the technical aspect, learning the technicals of trading, just learning yourself and your emotions, it's something that you really have to want. You're going to go through lots of periods where you doubt yourself, you really question whether you can do this, whether you have the mentality to succeed as a trader. Not so much whether you're smart enough to learn the technicals, because I really think that anyone can learn how to trade as far as the technicals go again, but having, again, the patience and the discipline to survive long enough to really learn yourself and learn how you can pull profit from the market consistently. is just something that takes a lot of perseverance. You really do have to persevere. And that I think that's a big reason why so many people fail at this. Again, the numbers that have been thrown around, about 90% of people fail, 10% make it. And even then, of that 10% who are profitable, an even smaller percent are hugely profitable. So while I would say that being profitable is definitely putting you in the 10%, being profitable and making a huge amount of money are two different things. So that's why I say that you need to be realistic about your expectations from trading, because there are so many people out there who tout the advantages of day trading and that you can go in, make your money in, whatever, an hour or two, and then drive your Ferrari around, pick up chicks all day long. It's completely unrealistic. Your goal should not be to reach, a huge amount of wealth where you can just live an exorbitant lifestyle, drive around in Lambos and all that good stuff. If you want to make a living from trading, you can certainly do that. But you just need to be realistic and understand that to make the kind of money that you would need to make to have that kind of a lifestyle is probably, I would say, only 3% of people can do that. So now your odds are even smaller. Your first goal is to get into that 10%. Don't worry about the 3%. Just get into the 10%. Find a system that works for you. Learn yourself. Learn what you need to do to consistently pull money from the market. No matter if it's, $50 a day, $100 a day, whatever the case is, it doesn't have to be very much, as long as you're trading a system and you have consistency with that system, that you have the confidence and the conviction that you can use to pull money from the market most days. Obviously, no strategy works all the time, but most of the time your strategy works, so you have the conviction and the confidence that you can pull money from the market. Now, where it becomes more difficult is once you have a system and you have at least the psychological, the mental framework to be able to trade successfully, to be able to sort of control your emotions. Once you have that, it becomes a battle to maintain it. Okay, so what can happen is when you do eventually find success, and I know a lot of you who are just getting started, it may seem like a long ways off, but eventually, if you stick with it and you're disciplined and you control your risk, so you don't run out of money before you can figure it out. When you eventually get there and you start having consistent success, what can happen is you can actually get in a situation where you get overconfident, and that can be a very, very dangerous thing. So just when you're actually getting it, you're having consistent success, you have the confidence and the conviction that you can pull money from the market regularly, all of a sudden that overconfidence can lead to a disaster of a day or a disaster of a month or year, whatever the case may be, where you end up losing everything. And that obviously it hasn't happened to me, but I realize that that is a very real risk. And so it's something that I try to be aware of every single day. But all it takes is one day to really slip up and just lead to a complete disaster. And that's where you hear the stories of traders blowing up, meaning that they lost everything in their account. They blew up their entire account. They have nothing left. So it's certainly something that you want to avoid at all costs. And, it's easier said than done, of course, but you really have to be able to listen to yourself, pay attention to what your body, your emotions, everything is telling you. Because again, like I said, this job not only takes a psychological and mental toll on your body, but a physical toll as well. The hours of screen time and studying that goes into this, staying in tune with the market really requires you to be watching the market every single day. You need to be at this, even if you're not trading, You really need to be at the screens watching the market, getting a feel. It's kind of a feeling, right? You get a feeling of what the sentiment is, not just what, it's not just abstract, like looking at charts saying, okay, it looks like it's bullish, bearish, or whatever. A lot of it is by feel, and it's one of those things that you just have to experience. It's really difficult to explain, but this is a job that you can't just walk away from and then come back and expect to just pick up right where you left off. If you take an extended vacation or something away from trading and you come back, you're going to realize that you're kind of out of tune with the market, right? You don't have that feeling of what the real sentiment is. How these stocks trade from one day to the next is something that you feel, you kind of develop a relationship with these stocks, if you will, especially in the sense that I trade this, the same small basket of stocks every day. So I know how they trade, but how they're trading this month might be different to the next month. So that's why it's really important that you are in tune with the market all the time. So this is definitely a job that will, if you're not careful, it can consume your entire life. So I just want to kind of express a little bit of caution to you guys about that, because I think for a lot of people, once they realize how hard it is, they pretty much give up. Either they run out of money, or, they just give up because they thought that trading is going to be easy. They saw a YouTube video where someone makes, thousands of dollars in, I don't know, a few minutes or whatever, and they think, oh man, that's incredible. All they did is push a couple buttons on their keyboard. They made a few $1,000s in 10 minutes, called it a day, and then drove around in their Lambo for the rest of the day. That's amazing. I want to do that. And then once they try to do it, they realize how difficult it is. They end up giving up. So like I said, it's one of those jobs that you really have to persevere, and learning your psychology and your emotions, your strengths and your weaknesses, and really practicing patience and discipline is going to be paramount to you succeeding in the long run. Now, there will be many times, like I said, that you're going to want to give up. So what I want to do is just kind of show you this poem. That it's a really good. It's called "Don't Quit," and I'll just read it off to you, because whenever things are going really hard for you, when you're just really struggling, try to look back on something like this. This is kind of the self-affirmation practice that we talked about as a daily routine, along with meditation. Can also really help to clear your mind and help you stay grounded with what really matters. Because at the end of the day, guys, trading, it's just a job. I know right now, especially for those of you who are very new, it's very exciting, and it feels more like, it doesn't really feel like a job. It feels like a fun hobby or something. And it should not be a hobby. You should treat it as a job. That will be easier to do later. But I assure you that it is just a job, and you need to stay grounded to reality. Family, friends, your personal life, that is all way more important than trading. So anyways, like I said, there's going to be plenty of times that you're going to be struggling. You're going to want to give up. And so just look back at this poem. So it's called "Don't Quit." It says, "When things go wrong, as they sometimes will, when the road you're trudging seems all uphill, when the funds are low and the debts are high, and you want to smile, but you have to sigh. When all is pressing you down a bit, rest if you must, but don't quit. Success is failure turned inside out, the silver tent in the clouds of doubt. And you can never tell how close you are. It may be near when it seems far. So stick to the fight when your heart is hit. It's when things go wrong that you must not quit." Like I said, it's a very inspirational poem that I kind of struck a chord with me when I was first introduced to it. I think someone, one of the other traders on Twitter or something, shared it, and I saved the picture because it really meant a lot. And so when you are struggling, just look at things like this. Look at your family. Look at the things that really matter in life. And maybe even question, is trading right for you? Because the fact is that a lot of you who are watching this now will realize as you go along in your journey that it's just not for you. And there's nothing wrong with that. There's absolutely nothing wrong with that. I've said this before. There are easier jobs out there than trading. The aspect of working from home, you can work in your pajamas. It's nice. It's romantic to be able to think, you can just wake up, make some money, a couple hours, and then have the rest of the day to do whatever you want. But there's a lot more to it than that. You can't just literally come in and make money in 2 hours and then call it a day. There's a lot of homework to trading too, not just when you're learning, but it's never ending. The market is ever changing, ever evolving. And so you have to constantly stay on top of the market. So the work is never ending. It is a full-time job. So even though you might come in the morning and make your money in the first hour or two, you're going to be spending more time than that, looking at the markets and studying and journaling and everything else that's involved. So just understand that there's a lot more to it than what a lot of these people on YouTube will show you. They just make you think that you can come in 2 hours, make, a whole bunch of money, and then go out and drive Lambos all day. And it's just so far really beyond that. Now, one of the other things I wanted to share with you is I actually took a picture of a trade that I had executed. And you'll see in this picture that I'm down over $10,000. This is actually combined with some positions that I had closed and one that's open here. This was trading options on Tesla. And you can see that I actually have 21 contracts and I have an unrealized loss of $9,195. So combined with the realized loss that I had already had on that day for $960, I was down over $10,000. And that was by far the most I'd ever been down on any position. I don't remember the exact dollar amount, but I believe the most I've ever realized, the biggest loss I've ever realized since I started trading 4 years ago was just over $3,000, and that was on Amazon. So to be down $10,000 was absolutely just a disaster of a situation. And this is really what the reason that it got this bad is psychological, right? Psychological. I did not honor my stop, right? I had a trade plan. I executed the trade plan. However, I made a mistake by taking too many contracts when I executed the trade plan. And instead of just immediately taking the trade off or just downsizing after I realized that mistake, I decided to just hold on to it and hope that I might be able to get an even bigger win than what I was originally planning based on my risk profile for the trade. Well, needless to say, the trade continued to go against me, far past where I was planning to risk. So not only did I let it go past the risk point that I was risking on the technical chart, the technical level, but I also continued to add to the position. And the age-old theory that we talked about, never add to a loser, is something that I'm sure most of you who have been trading for a while have probably done. Those of you who haven't started trading, you will probably do. But this is what can happen. Now, I got very lucky that I was able to get out of this for only a $150 loss. But I assure you, it was 100% luck, because what happened in this situation is once I let the trade go so far against me that I was basically going full tilt, I was completely committed to just trying to get out of this position, break even at all costs. It allowed me to put myself in an extremely damaging situation psychologically. And while I was able to get out of the position, I could have ended up losing even more money than this. It could have been really, really bad. This is about 1/5 of my account. So if I realized that $10,000 loss, I would have lost 1/5 of my account in just one trade. That is way more risk than I'm supposed to be putting on for even just one day of trading. So the point that I'm kind of getting to here is that I was very lucky that I was able to get out for basically not much of a loss at all. But most of the time that won't work. That won't happen. You'll end up taking a much bigger loss. If I had just taken this off once I realized the mistake that I made, or even if I had just taken it off with the added size, with the bigger size than I had planned on taking, if I had just stuck with that size and stopped out when the technical level broke where I was risking, I would have probably lost, if I remember correctly, about $1,300. So while a $1,300 loss would certainly sting, it would not have been just a disaster of a day. $1,300, I know I can make that back in probably a week. Based on what I was making at the time, I would probably make that back in about a week. Now, I wouldn't want to lose that much, obviously, but if I had the option to lose $1,300 versus $10,000, which one do you think I'm going to pick, right? But in the moment, your fear, your emotions really prevent you from seeing clearly, from rationalizing from a clear standpoint of your stop's been hit. You just have to eat the loss. It's part of trading. It's part of the business. You just have to take the loss versus it has to bounce eventually. It has to come back up. I have to get out of this break even. I can't take this loss. I can't take this. Well, that's telling you right there that you didn't accept the risk. You have too much size, and you're obviously emotionally compromised. Your emotions are raging, and you're just in no position to be making any kind of financial decisions. So I'm sharing this with you because this, although I didn't realize this loss, it was a huge wake up call for me. And one of the reasons that I think led up to this, other than the fact that I kind of started in with too much size, partially by accident, but then by continuing to hold it, even after I realized the mistake, was that I was on a hot streak, right? Leading up to this, I was winning trade after trade after trade. I had almost forgotten what it was like to lose. And that is one of the caveats I would say to my style of trading, being a scalp trader where I'm in and I'm out usually very quickly. One of the things we talked about, the pro of that type of style of trading is that you don't have to be right for very long. So it's a lot easier to be right for a very short period of time than it is for a longer period of time when you're trying to capture a larger trend, like trend trading, as we learned. Can be more difficult because you have to be right for longer, right? But when you're scalping, you only have to be right for such a short period of time. It's a lot easier to be right, which means that your accuracy is really high, which means that most of your trades you win. However, whenever you do take a loss, there is that chance that one of those losses is going to be a big one. And that is just kind of a caveat to scalping. And so while you might take a pretty big hit occasionally, most of the time you're winning. And so that kind of offsets those few times that you do take kind of a big hit. Not a hit this big, mind you, like a $1,300 hit. But the point that I'm making here is that the problem with that is that when you get so used to winning all the time, you almost forget what it's like to lose. And then all of a sudden, when you're in a situation where you are down on, that big hit, you're down $1,000, $1,300, whatever your risk profile for the trade is, you're down, and you should be realizing, okay, this is that rare occasion where I have to take the big hit. Just got to take it, and that's it. And so you kind of forget, and I think that kind of led to me, and then on top of that, accidentally taking too much size really kind of threw me. And then the volatility just was huge, which, compounded how bad the loss got in such a short period of time. All of these things kind of came together to make this perfect storm that could have led to a huge disaster. But just by pure luck, I was able to learn this lesson without having to lose so much money. Now, obviously, that's not to say that I won't someday have a loss this big as I continue to increase my size and take on more risk. Of course, eventually I might have a loss this big. I don't want to, but I realize that it's a real possibility. But the point here is not so much the dollar amount. The point here is all of the things that kind of led up to this trade and how I managed the trade, everything that went wrong from the time I executed the trade to my thought process during the trade, all the way up until the exit of the trade. And it's kind of ironic and a little bit funny that when it did finally kind of bounce and I was able to get out for a $150 loss, if I had held just 2 minutes longer, I would have made over $3,000. And so that really kind of messes with your head a little bit too. But again, I never should have put myself in that situation. So the fact that I was even able to get out with only a $150 loss when I was down over 10,000 is pure luck and simply incredible and a gift from God that I should just be thankful for. But, I like I said, I only say this because I know that you guys will be in this situation sometime too. And I want you to, when you find yourself in this situation where, you're looking at taking a pretty big hit, you really need to you just need to take the hit, because there will be times when you end up taking the hit and the trade ends up eventually coming back up, and then you end up really mad because you took the trade off for a big loss when you were supposed to. It was just one of those rare times when it just didn't work and you have to take a big hit. And then you see later it comes up and does exactly what you thought, but it just didn't do it when you thought you were going to do it before you had to stop out. And then you get frustrated, you get mad, you revenge trade, and you tell yourself the next time I'm not going to do that. And the next time's when this happens. So just always be aware that when your stop gets hit, you have to take the trade off, because remember, you have to accept the risk before you even take the trade. So I know that a lot of you guys probably think that you're accepting the risk with every trade you take, but I think that if you really give it some thought, some kind of, reflection on your thoughts during the trade, before, during, and after the trade, you'll realize that, especially early on, there were probably a lot of instances where you really didn't accept the risk. And if the trade hadn't have worked, you probably would have been in pain. So yeah, like I said, really emphasize patience, discipline, and risk management early on in your trading career to hopefully avoid situations like this. Never put yourself in a position where you're holding and hoping that something is going to come back in your favor, right? It's just not a situation you ever want to put yourself into. And I hope that, this course and this video and everything that I've spoke about on this channel, my personal experiences and journey throughout trading, helps you avoid some of these pitfalls anyway. Try to, set some goals for yourself, but don't set goals that are just too abstract or too far reaching, right? I mean, don't set a goal like, I want to make $1 million from trading. I mean, that's not realistic, certainly not early on. In fact, I would recommend not setting goals at all relating to how much money you're making, because if you set a goal, say I want to make $300 a day from trading, if you don't reach that goal, then you're going to feel like you failed. The goals that you create should be related to trading. For example, if you're not that good at entering into trades, then set a goal to work on and improve your entries. These types of things are goals that are attainable and that you can actually focus on and will improve your trading. Setting a goal of making $300 a day is not going to improve your trading at all. And in fact, it's going to be psychological damaging if you don't make $300 a day. So just avoid that altogether, because you're, like I said, that's gonna tie your thought process to the money side of trading. And the whole idea of really what I'm trying to say is that you need to separate the making money part from the trading part and focus on the trading part. Focus on finding and executing good trades. Get excited about a trade that you executed perfectly. Even if you didn't make that much money because you didn't take very much size, you should be more excited about a trade that you executed perfectly right from your trade plan than a trade where you made a boatload of money because you got lucky. Okay, so just really try to set goals and be realistic with yourself throughout this whole process. Also, when you do make money, always respect any money you make, even if it's only $25, $50. Always respect the money you made. Try to avoid following or at least paying too much attention to some of these bigger traders on social media that they share P&Ls where they made thousands of dollars, $100,000, whatever the case may be. That can be incredibly damaging to you as a trader because it's going to make you feel inadequate. It's going to make you feel like you're just not able to succeed at the level they're at. But a lot of times what they're not showing you is the huge losses that they took, the trials and the tribulations that they went through to get to the point where they could make that kind of money. You have to understand that when people are posting P&Ls where they're making $50,000 or whatever the case may be, they're putting on a huge amount of risk to make that kind of money. And when you're just starting out trading, you are nowhere near ready to be putting on that kind of risk. And you just shouldn't even be considering putting on that kind of risk. So really paying attention to P&Ls like that is just not doing you any good at all. So try to avoid that. That it's easier said than done, because I know a lot of us, we like to talk with other traders on social media and all that, and there's nothing wrong with that. Just like I said, just be very aware that, looking at someone else's successful day, especially if you had a bad day, if you had a red day and you see someone else who just killed it that day, it can just really be demoralizing. And especially if you do have a red day, like you just had a really bad day in the market, I would just recommend avoiding social media altogether, because all you're going to end up doing is you're going to see other people who killed it that day, and it's just going to make you even more upset. Then you're going to come in the next day and you're like, I'm going to come in, I'm gung ho, I'm going to make this money, I'm going to kill it, and then you're going to end up having another huge red day. And it's just, that's how you go down the rabbit hole. You just go full tilt, and the next thing you know, you blow up your whole account and you don't have any money left to trade with. So just always respect any money you made. Just understand that it's going to take a lot of time to get to the point where you can make the kind of money that some of these guys are posting, and you shouldn't even be worrying about that. Just focus on the trading. Focus on trading well, finding good trades, and the money will follow. Like I said, always consider your personality and what kind of suits your style of trading. For me, like I said, I'm a scalper, so I know that I like to get in and out. I like to make my money quick. I don't like that long risk exposure where I'm in the market for a long period of time because my capital is at risk the entire time that I'm in a trade. So it doesn't make me that comfortable to be in a trade for a really long period of time. That's one of the benefits to scalping. Also, the high win rate means that I win a lot. So for me, mentally, it's important that I win a lot. I would rather have a lot of smaller wins and just occasional losses versus a lot of small losses with hardly any wins in there, but eventually getting a big win that makes up for all those losses. Because I'm not really that patient of a person, and that is why my mentality is like that. If I'm not a very patient person, I want to get in and I want to make my money quick, because I'm in, I'm out, I made my money, and so I get that gratification of making my money quick. That that just suits my personality, and like I said, I'm winning very often, so it of course feels good to win. So for me personally, I would rather. That's how I would rather trade. That's how I trade. So if that's what works for you, then do that. If not, then do what works for you. So that's the biggest thing, guys. So I'm gonna wrap it up there. Hopefully you found the video helpful. Like I said, there's a lot to psychology of trading. There's only so much that, of course, I can cover in this broad course for the entire learning how to day trade. But hopefully, like I said, it was helpful. In the next part, things are going to start to get really exciting. I'm sure this is what most of you guys are waiting for. We're going to start learning the technical aspects of trading. So we're going to start learning technical analysis, support resistance, all that good stuff. We have some workshops that we're going to be doing. And later in the course, we're also going to be going over the strategies that I use, looking at some live videos of the setups kind of playing out in real time, because being able to see the right side of the chart, being able to see these setups in real time is obviously a lot harder than looking at charts in hindsight at the end of the day. It's real easy to look at a chart and be like, oh, why didn't I buy here and sell here? But being able to do that in real time is something that just takes experience. So hopefully these videos will kind of help you develop the skills needed to do that. So thank you again for watching, guys. If you would, please hit that like button, and I will see you in the next video.